Balanced Bookkeeping, which on the face can put you all to sleep, and I know that, so I was trying to think of something a little more, I don't know, fun or different to present today. And so I am going to be talking about a concept called Profit First. But it's a book written by this guy that basically is talking about how businesses should take profit first. You know, the reality is we're small business owners. You know, we start our business, we tend to put the money in the bank, and then we maybe pay ourselves, buy whatever we want, might nickel and dime the business on all the things that we don't pay ourselves for, going out to eat. Oh, it's a business expense. Sometimes at the end of the year that comes back to bite you because especially with tax laws changing, you don't get to take those deductions. So basically what he's talking about is how to manage your cash flow in a different way. I have implemented this with a couple of clients. It was really tough because they were already in business for a while. And it was pretty painful for them to go through this change. And I actually implemented this when I first opened my business. And it has helped me kind of plan for the growth that I've gone through. So on the second page, I just kind of gave you guys a copy of the spreadsheet that I use. So basically the concept is that for every dollar you bring in, that you're going to put a little piece of that dollar into a profit account, that you're going to put a piece of that dollar away for your tax liability, that you're going to put a piece of that dollar away for, in my case, my own compensation, because I put my compensation based on what my income is. So if I don't bill people, I don't get paid. And then basically the rest of it is your operating expense. So it kind of helps create a process for you to budget how much you get to spend and how you want to grow your business. You can change percentages as your business grows, or declines, I guess, as the case may be. And brain fart. Sorry about that. Down here, I also have some recommendations. So, like, I guess the big thing with this is that you need to have 4 or 5 different bank accounts, which can get kind of confusing for some people. 2 checkings and then 2 or 3 savings. The reason that you need 2 checkings is because if you have all savings account other than your operating expense account, you run into restrictions on how many transactions you can have in a savings account per month. 3, right?
600.
6, okay. So I would just want to kind of talk through how I guess I do this so that you kind of understand. So basically I have income, and then I have the profit, the OPEX, taxes, comp. And every Monday morning, I go into the bank account and I figure out what my total deposits for the month, for the week prior were. So let's say that I put in $1,000, and I have my percentages. So we'll just do, I don't know, 6, 7, 8, 20. So out of $1,000, I'm going to have 50 that goes into profit, 600 into op, 150 into tax, and 200 for compensation. And then every Monday after I do that, I move my operating expense and transfer that into my operating account, and that's what I get to operate on. And I do that every week, and then at the end of the month, I total it all up, and I move all these big amounts out of my income account, and I transfer them over. So I have profit, tax, compensation, whatever I've transferred for compensation for me personally at the end of the month, that's what I get to pay myself the following month. So, like, I already know personally then how much I need to budget, because I already know how much I'm paying myself out of the business. And at the end of every quarter, you pay yourself your profit. So you actually get a bonus. Do with it what you want, just take it. My first profit check was like $20. And I came home and I was like, honey, I got my first profit check. We're going out for something.
Big Macs.
You know, But by the time I went on my vacation with my husband this last time, my profit check was enough for us to actually treat ourselves to an amazing dinner in Europe. Like, that was kind of the big, you know, cool, I've been working my butt off, and this is my little reward, so. But a lot of small business owners don't pay themselves. They may pay all their personal stuff to the business, but then they say they don't pay themselves. So they don't correlate those two as the same thing. So this just kind of helps separate it out, know you're paying yourself, know you're gonna get yourself a bonus, and then you can manage kind of how your business is growing and what your operational expenses are on a weekly basis. So, anyway, that was anyway. Yes?
So since you have 5 categories there and 2 bank accounts, how
So
do
I
you...
actually have 3, so I have 5 accounts. So this one is a checking account, and this one's a checking account, and then these are savings accounts.
Thanks.
Yeah. And the cool thing too is as your money builds up in your savings account, you actually are going a little bit of interest. Little tiny bit of interest.
It's going down.
Huh?
It's going down. That little bit of interest that we were excited about at 2%.
Going away.
It's going down.
Yeah, fair enough.
So part of this also, so this can be done personally as well. So everyone should run their life like a small business. Even if you're working as a W-2 employee and stuff, this is the concept of pay yourself first, profit first. We need to be cutting off some for ourselves, for our future, not just running our life expense right now. So it's the same concept.
Absolutely, and like, I use this account for my owner compensation account, because that's what works for me. But if you, whatever your goal is, especially on a personal level, you can make that to your, you know, make it your personal goal. You want to save for your IRA, or, you know, you want to save for vacation. This can all change, and you can change all your percentages as you're building. When I first started, I created this spreadsheet, and I'm like, oh yeah, I'm totally putting 10% into profit, and I'm totally putting, you know, and I can guarantee you that after doing that for like 2 or 3 weeks, I was like, so 98% goes into OpEx, you know, 0 goes into compensation, but you adjust as you get, as the business adapts. So, yeah. Yes?
So you said at the end of the month you transfer all the totals into those accounts. Is that, you're not doing that on a week-by-week basis? You're just tallying it?
I don't transfer the compensation tax and profit on a weekly basis
Okay.
because I'm not doing anything with that money, so I just, for me, it works to just do it on a monthly basis.
Just tally it up and then do it.
Yeah,
Okay.
and then I just kind of do an audit, you know, to make sure that
Where would charitable giving come out of?
your OpEx, you know, because that's part of your business decision making.
And when would that happen? At the end of the month or annually, or what is your thought on that?
I think it's what kind of works for you. I mean, again, that could be a goal if you wanted to do it annually and you had a goal in mind that, you know, you wanted to put aside like, you know, $3,000 that you could donate at the end of the year to whatever cause or causes you wanted to, then you could make that kind of part of this process and make that a goal and do a percentage, you know, kind of to move in. I know a client that I've been working with, he hasn't quite gotten set up yet, but I was reviewing this with him, and he actually kind of did this a little bit reverse, where he said that I need to make this much every month. Like, I need to pull this much out of my business every month. He doesn't have a lot of expenses in the business. And so we actually kind of adjusted this so that he could track what his total monthly compensation was to see where, at what point is he going to have to maybe adjust these percentages to make sure that he's paying himself what he needs and then reducing what he's moving into other accounts.
Over here. So, under the OpEx, you would have multiple accounts under that.
No, you're operating, I mean, it's your checking account, right?
Okay, so where would you differentiate between This is went to marketing, this went to business meals, this went to,
Right, but those are all operating expenses, so I'm just kind of talking about in general, just bank accounts, not necessarily,
so you don't break down
We do that in
how much should I
you
spend?
do that in QuickBooks, right? You do that in you're doing that as you're allocating your operating expense. So out of the $600, you might have, you know, I don't know, 100 to advertising, 100 to meals, you know.
That's
100
actually what Maria does. That's
to
the bookkeeping part.
insurance, that kind of thing. So, but it's to help kind of, but that's the point, is that you only have $600 to spend. So out of that 600, how are you going to allocate it? And then, once you've allocated it in terms of your expenses, so that it's broken down in QuickBooks on the accounting side, but it doesn't matter in terms of the bank account. Yeah.
How do you factor in cash flow? I mean, I think a lot of small business owners probably relate to, like, you've got that one priority client, they tell you it's gonna be 500-day terms. So, like, if you've got money sitting there in profit, do you take that out as opposed to borrow against your line of credit or something? When you factor in, like, the percentages?
So I don't, like, I have a line of credit, and I try to avoid it, because once you start dipping into your tax account or your profit account, it's a lot harder to get it paid back.
So you would use the line of credit?
So I would use the line of
Okay.
credit, yeah.
Got it.
Yeah, I mean, I also have a client who uses a lot of subcontractors.
Yeah.
And so he actually has a separate savings account, because he does, like, his jobs will last anywhere from like a month to 8 months, a year out. And, you know, typically he'll get a deposit down on the project. And so, once that deposit arrives, we put whatever equivalent percentage of that deposit that would go to pay subs is put into that account. So we're saving it for being able to pay that sub kind of halfway through the project,
Got it.
as the case may be.
What about budgeting? Do you do your budget first and then set this up?
Yeah, actually, because yes, because you're gonna kind of need to understand what your goals are in terms of your percentages in here. And then your budget would then fluctuate based on what your reality numbers are. So,
As far as like the taxes portion, is that percentage based off of just what like self-employment tax is? Or at the end of the year, you're saying set aside this money because at the end of the year, if they're like 1099 contractor, they're gonna have to pay that up at the end of the year? Or is that just, I mean, how did you come up with that percentage? Just out of curiosity. It could be something different, I just was curious.
most businesses tend to kind of save between 10 and 15% if they're LLC single proprietors.
Sure.
So, yeah.
Okay,
And obviously, there's so many factors once you get to a personal return
sure,
that impact that percentage, whether, you know, you're married to somebody who has W-2.
Yeah.
Income, that kind of.
just in my experience is that they take in the money and then, you know, they either spend it or do something else. It's like, well, have you set aside this money, being that you're a contractor or self-employment, because at the end
Exactly, and
of the
this
year, you're gonna
helps
have to
you
write
do
a
it.
huge check, and you don't wanna do that,
And
so.
they freak out and they take it out on their CPAs and their book.
Right, it's like. Don't,
It's not for lack of trying, guys.
I always try to advise them, hey, you know, it's not their fault, they're telling you this percentage because at the end of the year, it's a huge
You
chunk.
can avoid that by being on payroll.
Yeah, exactly. Yeah, he goes, oh, you need to escort yourself and take a payroll.
All right, we got time for one more.
So if you are oversaving in your tax account, I mean, you know, obviously if you're saving here and then, you know, if you're paying quarterly, that'll help, you know, the pain at the end of the year, because then you save the money to help pay quarterly. And whatever's left over, if you didn't need it all, ends up kind of, you know, moving into profit, right? Because you didn't need all that. Thanks.
Thank you.
Well, thanks very much for doing that.